Hey, everybody, it's Nicole Benjamin, your host here at Seeking Alpha to bring to you another episode of the Weekly Grade with Stephen Cress, and we're bringing to you market insights in minutes. Now, for today's episode, of course, I have none other than Stephen Cress. Thank you so much, Steve, for joining us today.
Thank you so much for organizing this. Happy to be here.
Ab- Yay! Absolutely. Happy to have you. And for everybody that's listening in, Stephen Cress is our VP of Quantitative Strategy here at Seeking Alpha. He's the guy behind a lot of the amazing products you've seen on site, our Alpha Picks, our Pro Quant portfolio, and our soon to be QGI, which I'll have Steve talk a little bit more about that later in today's episode. Now, for today's questions, I wanted to jump right in with you, Steve, and talk about SpaceX and all they've got going on. So, with the aerospace sector in mind, getting just a lot of attention in general, SpaceX IPO, you've identified RTX Corporation as a top pick for its space defense tailwinds. So, with the global tensions that are rising and how the Pentagon's reliance on RTX Corp competencies are kind of just helping the company ramp up, like, what is that massive backlog? What can you tell us about that?
All right. Well, the first thing that comes to mind is the attention that's being given to SpaceX, which Elon Musk has done incredible things creating this company really just like in the last decade compared to many other companies that are out there. And they are at the forefront and the state of the art technology for aerospace and defense. Having said that, even with Starlink and the revenues that come in from that, SpaceX right now does about 18 billion in revenue for 2025. Um, and if we look at earnings, that's actually negative earnings. I think their negative earnings were around 5 billion for SpaceX. There are many companies out there that are generating far more revenues in aerospace and defense and earnings than SpaceX. So if you wanted to do an apples to apples comparison, I think there are other companies that have a very attractive valuation framework and revenue stream compared to SpaceX right now. Not denying SpaceX is an incredible company and it may have an amazing, brilliant future, but in the here and now, I like RTX as an aerospace and defense company. If you look at this slide right here, it shows you for the first quarter, they did 22 billion in adjusted sales. They did more in one quarter than SpaceX did all of last year. And if you look at their earnings, they're earnings positive, $1.78 in earnings for the first quarter versus SpaceX, which has negative earnings. So I think in terms of looking at companies and valuation frameworks, apples to apples, RTX looks like a really good buy here, but SpaceX definitely adding a lot of hype. Uh, there is also outside of the attractive valuation framework, there are a number of hostile wars going on right now, and military inventories have been depleted. So that's puts aerospace and defense companies in a good position to grow in the coming years. And I think this company looks really good for it. RTX.
All right. Now, for my second question for you, I wanted to kind of dive into what you noted in your article. You said that free cash flow is king for any kind of financial flexibility. So, with that in mind, what is the specific cash flow trend that is kind of giving the quant system such high conviction for RTX at the moment?
Okay, so when we look at the cash flow, it's actually pretty strong. Now, if you look at the factor grades on the right-hand side here, you'll see that the valuation is a D, which means, versus the sector, it's a little expensive, but not nearly as expensive as SpaceX would be. And the overall growth grade is a C. But if you clicked into that, you would find a lot of underlying metrics, and you find the historical growth is a bit slow for RTX. If you look at the forward growth, it's definitely picking up. So by comparison, if we take a look at the forward EPS growth rate, it is 22% for RTX versus the sector, which is just 12%. So forward EPS looks really strong. And if we look at free cash flow, to highlight your question, free cash flow is an amazing 29.93% versus the sector at 10.65%. So it absolutely crushes the sector in terms of free cash flow right now. And that's one of the reasons why I like the stock. In terms of its overall ranking, it's 6 out of 68 in the aerospace and defense industry. But I like the stock also because We are in a bit of a volatile period, even though the markets are hitting new highs here. There's a lot of inflation fear, interest rate fears, there's macro risk fears, and we have midterm elections coming up. So I kind of like to look at a stock that has a dividend in this kind of market. And RTX is what we call a dividend aristocrat. They've had a dividend for 36 consecutive years. So one of the reasons, another reason to like this stock.
All right. Well, sounds good to me. Now, Steve, we touched on it at the beginning of the episode, but speaking of market insights in minutes and all the great things we have on Seeking Alpha, can you tell us a little bit about our new product that's going to be launching here shortly?
Yeah, absolutely. So we have two products that are out. Alpha Pix, which people might be familiar with. It's had an amazing return since its inception. It's about up about 400% compared to the S&P, up about 90% for the same period. And we have another product that we launched a year ago, which is the Pro Quant Portfolio, and that's up close to 55% in the last 52 weeks. However, what I like about this new product that we're going to be introducing this Wednesday is called the Quant Growth and Income Portfolio. The common thread here is that it has strong buys and buy recommendations like the other two products, but this particular product, all the companies have a dividend. So if you are investing and look for income as well as capital appreciation, this would be a great product. Again, it's called the Quant Growth and Income product, and we are launching it this Wednesday, June 3rd.
All right. The Quant Growth Portfolio. Everyone that is listening in, go ahead, click the article, read what Steve's talking about SpaceX, and also give him a follow.
Yeah.
And if that sounds like it might be right for you, also take a look into our products that we have here on site. And we'll also see you here next time. Thank you so much. Past performance is no guarantee of future results. Content is offered for information purposes only. Unless stated otherwise, any and all individuals participating in the video are third parties that include both professional investors and individual investors who may not be licensed or certified by any institute or regulatory body. Unless stated otherwise, the views or opinions expressed may not reflect those of Seeking Alpha as a whole. The accuracy and completeness of content shared cannot be guaranteed. Seeking Alpha does not take account of your objectives or financial situation and does not offer any personalized investment advice. Seeking Alpha is not a licensed securities dealer, broker, U.S. investment advisor, or investment bank.